All right. I think more attendees may still come in, but out of respect for your timeliness here, let's go ahead and get started. Today is our 5th webinar in this Paycheck Protection Program series. Today it's on the Paycheck Protection Program Flexibility Act. So welcome. We are so glad you're here. Before we dive into the content, let's get started with a little bit of housekeeping. And so I will go ahead and let Austin take care of that part for us.
Hey everybody, if you've been to any of our previous webinars, this is going to be just about the same. We'll be doing a Q&A session after the general presentation. If you have any questions during our presentation, go ahead and click on the Q&A button at the bottom of Zoom and you can type your question in. When we get to the Q&A session, I'll bring you into the actual meeting and you can ask your question to Dave, Pat, and Kellen yourself. If you don't want me to bring you in, you can designate in your question that you'd prefer for me to just read it out for you. We'll stick around and make sure that everybody's questions are answered. So if any questions come up, don't hesitate to ask. And with that, I think let's get it underway and I'll pass it back off.
Awesome. Thanks, Austin. Okay, we've got about 20 minutes of content for you, and then it will be time for your questions and answers. Let's start with a little bit of context. So far, the PPP has generated 4.5 million loans totaling $500 billion into the U.S. economy to keep 50 million Americans working. Of course, since the initial rollout in March, there have been a lot of developments. As one of our clients likes to say, it's like building the plane while we're flying it here. And that's true. There's been a lot of feedback about what has or hasn't worked. And some of that feedback has led to this Paycheck Protection Program Flexibility Act, the PPPFA, that was signed into law June 5th. It was hugely supported by bipartisan in Congress. And what we had been waiting for was specific SBA guidelines. Those finally came out this week, and thus we are bringing it to you. We're going to start with what's still unknown because that is going to impact some, developments and decisions moving forward. What's still unknown is whether the receipt and forgiveness of a PPP loan affects the tax treatment of ordinary business expenses. The IRS rolled out a notice earlier this year that said businesses that qualify for PPP loan forgiveness will not be able to deduct certain expenses, including wages paid for by the loan. And so this was not at all what Congress intended. They are not happy at all that the IRS took this position. And there's quite a bit of bickering back and forth in the White House and Congress with the IRS and Treasury. So we are expecting that additional changes will be forthcoming around the Paycheck Protection Program. Now, whether those enhancements or clarifications are going to come via the Treasury and SBA issuing some updated guidance, or whether it's going to come from an amended law or new law, we will see. With that part, let's go into what we do know. What we do know is that the PPPFA extended the covered period from 8 weeks to 24 weeks after loan disbursement. On a technicality, the covered period is going to end either the earlier of 24 weeks after loan origination or December 31st, 2020. So that covered period isn't going to roll into 2021. This is great news for everybody because it is going to assure the much greater likelihood of full forgiveness, letting you spend your loan funds for up to 24 weeks now. Now, it is true that borrowers who received loans prior to June 5th can elect to use the 8-week covered period, as was originally true. And this could be appropriate if you can get full forgiveness already within the 8 weeks period. So you've spent the money right and you can get full forgiveness. You want to wash your hands and be done with it and get that forgiveness covered. That could be the right decision. The reason we started with that, what we don't know, is because given that the tax question is not yet resolved, there could be a decision to make, about whether we should choose 24 weeks to push the forgiveness into 2021. Of course, that's going to depend on when you actually got your loan and when that 24 weeks ends. But this might result in the full deduction of ordinary business expenses for 2020. Again, is there going to be a new law? Is the Treasury going to come up with a ruling? What would even be the process? If we push the forgiveness into 2021, would they require an amended return for 2020? When are they actually applying the forgiveness? So there are these things to be worked out, but it does raise a question until there's clarity on those ordinary business expenses. Should I go 8 weeks or 24? What we would recommend is that you discuss that with your Generis & Associates account manager. One thing that is for sure, however, is that If you can't get full forgiveness within the 8-week covered period, then by all means extend to 24 weeks. All right. We also know payroll still includes salaries, wages, and tips up to $100,000 of annualized pay per employee, plus the employer paid benefits for employees, including healthcare, retirement, and state unemployment tax. This means that you can have a maximum payroll of $46,154 per employee if you're using the 24-week covered period, and $15,385 if you're using the 8-week covered period. That's taking $100,000, dividing it by 52, and multiplying it by either 24 or 8. Now that is per employee. What's true for owners, if you are the business owner, is that you can qualify for a maximum of 2.5 months of 2019 compensation, which would be capped at $20,833 if you're in the 24-week covered period. And so that is $100,000 divided by 12 months times 2.5. And that's it. So you can increase your wages in 2020. They're doing a no windfall thing on owners. And this second note here, for owners who have multiple businesses, the qualified wages max out at $100,000 across all businesses. So you cannot take the proportionate payroll of $100,000 across each of your businesses. There's a max cap, and that max cap really is 2.5 months of 2019 compensation, capped at a max of $20,833 for owners. So Congress was real clear. They're not trying to have owners make out like bandits with extra free money here. This was about keeping employees working, and you get your due part, and that's where it's capped. One thing that is true, if you are a Schedule C self-employed person, if you haven't yet applied, be sure to apply, get the 24 weeks. And what you're going to apply for is 2.5 months of 2019 net profit, and that's what's going to be forgiven. So it's pretty terrific. The payroll proportion in this new update has been reduced. So it used to be 75% of funds. Now it's down to 60% of funds, of PPP funds that you have to use for payroll. And so that upped the other side. Now, instead of just 25% of funds, you can use up to 40% of PPP funds for rent, interest, and utilities. So you get 24 weeks, you're going to spend 60% or more on payroll for full forgiveness. It is true that if less than 60% of the loan is used for payroll, you can still be eligible for partial loan forgiveness, where at least 60% of the forgiven amount has been used for payroll. What does it mean? Look at the actual payroll dollars that you spent, divide it by 0.6, and that's going to be the maximum loan forgiveness. All right. If you're self-employed, as we already said, sole proprietor and partner member owners, payroll is based on that 2019 Schedule C. If it's 8 weeks, $15,385. If it's 24 weeks, then it's 2.5 months. And as we already said, 2.5 months of 2019 net profit is basically going to be what you borrowed. So you ask for it, you get it, you request the forgiveness, and it was free money to you to help you survive. If you are a sole proprietor, therefore, or a partner member owner, do choose the 24-week period, and that should be good. Now, if you have employees, you're still going to want to spend 60% or greater on payroll, and then interest on mortgage or real property or personal property, and then rent on lease agreements and utilities. All these things still needed to be in force on February 15th of 2020, and deductible business expenses on your Schedule C. And what's absolutely true in all cases is no prepayments. No, you cannot prepay rent for several months. It's actual expenses incurred during the covered period. Good news is now that 24 weeks equates to about 5.5 months of covered period expenses for you. The PPPFA updated the safe harbor rules. In particular, they updated the safe harbor deadline for rehiring employees if your FTE headcount is reduced. It used to be June 30th. Now you have until December 31st of 2020 to bring your headcount back up. It also allows a safe harbor for reductions in loan forgiveness if you had fewer FTEs, but you couldn't return to the same level of business activity kind of pre-COVID because you were complying with requirements or guidance issued by public authorities and public health authorities related to worker or customer safety requirements. So you've had to implement social distancing in your operation, or sanitizing protocols, or capacity limitations. And so what they're saying is, if you were complying with public health requirements and that affected the ability to return to pre-COVID FTE levels, there's a bit of safe harbor for any reduction in loan forgiveness for you, okay? They also provide safe harbor from loan forgiveness reduction if you were unable to rehire prior employees who were on the payroll as of February 15th of 20. Basically, they refused to come back, and you were unable to hire similarly qualified employees for unfilled positions by December 31st. So your clock got much bigger going to the end of the year to bring your FTEs back up. So that's also great news. A lot of this act is just really great news for business owners. Loan maturity. It changed the maturity term from 2 years to 5 years for people whose loans were approved by the SBA after June 5th. And it does permit lenders and borrowers to extend the maturity date of earlier PPP loans by mutual agreement. So bottom line, if you received your loan prior to June 5th, and you'll have less than full forgiveness and thus loan proceeds to repay, if you want to, contact your lender and see if they're willing to adjust the maturity term to 5 years instead of 2. Lets you spread out those payments, let your cash flow be a little bit better. Hopefully you're going to get full forgiveness though, and that will not even apply. Loan deferral has also gotten a little bit better. Basically, it extends the borrower's loan repayment deferral from 6 months, which was initially true in the PPP, to now the date when the SBA remits their loan forgiveness amount to the lender. So you request forgiveness, the SBA makes a decision, they pay the lender that you got your loan from. That is now the clock that you have deferral until. Now, if you don't apply for loan forgiveness, and why wouldn't you, but loan repayment is deferred to 10 months after the end of the borrower's loan forgiveness covered period. Presuming that's a 24-week covered period, you're looking at the loan dispersal date plus the 24-week period plus 10 months. So that's about 15 and a half months of deferred loan. Again, we would recommend, obviously, apply for the loan forgiveness. Good news, they did introduce the PPP loan forgiveness application. It is way simpler than the original application, way fewer calculations, all that FTE kind of stuff. It's applicable if you meet any one of these 3 criteria. First, you applied for the PPP as a self-employed person, an independent contractor, or a sole proprietor with no employees. If that's true, go easy. Or if that's not true, you applied and did not reduce salary or wages for any employee by more than 25% and did not reduce the number or hours of employees except for laid off employees who refused an offer to return. If that's true, go easy. Or you didn't reduce salary or wages for any employee by more than 25% during the covered period and you experienced reductions in business activity as a result of health directives related to COVID-19. If any of those 3 are true, use the easy application. It's shorter, it's sweeter, it's easier. That's a win for everybody. There's a link here that would be in the handouts. There's also a link on our website on our coronavirus updates page. They've updated the other applications, obviously, now because the payroll is now 60% and the covered period is 24 weeks. So the forgiveness application has also been updated accordingly. That's the more extensive non-easy version, but that's been updated. Likewise, the borrower application has been updated to reflect these updated terms. Good news too for borrowers, again, if you haven't yet applied or you know people who haven't yet applied, but they do qualify, there's been expanded eligibility for people to apply. And that is for business owners with 20% or more equity in a company who had past felony convictions. Previously, the look-back period was 5 years, but they've reduced it to 1 year for non-financial felonies where the owner may have experienced incarceration, been convicted, pleaded guilty or no contest, or is on parole or probation. However, the period does remain a 5-year look-back for felonies involving fraud, bribery, embezzlement, or making a false statement in a loan application or an application for federal financial assistance. So good news, the president and the country is wanting more people to be able to qualify to get this to keep your businesses running during this difficult time with coronavirus. So that said, PPP loans are available through June 30th. There is still funding available. After June 30th, there can be no more PPP loans, and that is by statutory law. So apply, tell the people you know who qualify to apply, contact your lender, reach out to us if you have any questions about that. With that, we're getting ready to turn it over to, I believe, Pat to share examples. So I'm going to go ahead and stop share and go off camera and let Pat pick it up from here.
Thanks, Dave. Yeah, this was really good law. I have a hard time even dreaming up a situation where any of our clients anyway, they're not going to get full forgiveness. I'll keep this very brief so we can get to your questions. I usually do the what do we do now section. I know our account managers are also on the call, so this is as much for them as for our clients. I'll share screen real quick. You guys have all been filling out your forgiveness trackers. And so I've got 3 examples of what you should do. First example is pretty obvious. If at the end of the 8 weeks, you're looking at your forgiveness tracker and there's 0 remaining loan amount, fine, we're ready. We're ready to apply for forgiveness. If you want to get it out of the way, we'll get it out of the way. We don't have to be in a hurry. Like Dave mentioned, we have 10 months after the covered period. Plenty of time if we want to wait and see what they're going to do with the tax law. I don't know if there's going to be a play there or not. My hope is that they'll just fix it and do what they said they were going to do and not tax the income. But if you're all right after 8 weeks, nothing to do here. We're just going to go ahead and apply for the forgiveness. Second example, you get to the end of the week, 8 weeks, you could see we got a little balance due. And so account managers just change this 8 to 24 and carry on. Keep spending money, keep doing payroll. Again, if you spent $60,000 in 8 weeks, all else being equal, you're going to spend $180,000 over the 24 weeks and you're going to get full forgiveness. So don't get in a hurry. Let's just carry on. Final example of what might have gone south. We get to the end of the 8 weeks, you borrowed $80,000, you've spent $82,000, but only 61% of it was for payroll. Well, under the old rule of 75%, that's not going to make it, but now it will. So all we have to do is do a little formula change to meet the new law, make this 75 a 60, make this 75 a 60, and we can see we're at full forgiveness. And the account managers are going to walk through this with you, so you don't have to worry too much, but I am getting questions about what does it mean. Just look at your forgiveness tracker at the end of the 8 weeks. If you firmly earned your forgiveness, we could apply anytime as soon as the banks are ready anyway. And I don't think for the most part they are. Otherwise, just keep going. It should be easy. It should be very easy to hit forgiveness. We even had good news in there for our felons. You guys are okay as long as you haven't done anything in the last year, I guess, is what Dave said. So with that, I'm going to go ahead and let you guys ask questions because that's usually pretty productive. Austin, you want to jump back in here?
Absolutely. We must have done a great job or people are really typing up some big questions because I have no questions so far. So I don't know what we want to do with that.
That's different.
I know. Usually we're here for like 45 minutes answering questions.
Yeah, it was pretty simple and great. I mean, it's hard not to nail it.
Yeah. I figure we'll give it a couple minutes. I know there's a lot of what we presented is just mostly facts, and here are like concrete law changes. So I don't know where the questions could come in.
It's Friday afternoon, soon. People
Yeah.
just want to get out.
I'll tell you what, out of courtesy to people, let's just tell them what remains. And if questions come in, then we'll handle the questions.
Linda, I see your question. Linda Recupero asked a question in the chat window. It's not, you get to elect. You actually get to choose 8 weeks for your covered period or 24 weeks for your covered period. So if you didn't make it in 8 weeks, you've got another 16 weeks to spend the money.
Mm-hmm. And for anyone watching the video on demand, the question was, is the window for wages still any 8 weeks period?
Right. So it just grows to 24 weeks. Awesome. Well, while we're waiting on any remaining questions, we'll just remind you, stay connected with our coronavirus updates page. We do keep things up to date. We posted about this. This is where you can get the updated applications. And we would encourage you to, follow these action steps. connect with your account manager to determine your current forgiveness level, determine whether you're going to go with the 24 weeks or stay with the 8 weeks, depending on where you're at. Take a look at those updated forgiveness applications where you can use that EZ. Start pulling together your forgiveness documentation. Again, you can partner with your account manager here and we'll certainly help you with that. And then do stay in touch with your bank. As Pat pointed out, they haven't opened even the forgiveness application, and there is no rush. Like he said, we have 10 months after the end of the covered period, which can now be up to 24 weeks. So there's no rush. I mean, as quickly as we're ready and that our banks are ready, that they have their portals, it's going to be electronic. You're not going to be able to be sending paper. So they're going to have a process, and you're going to want to listen to them. It's going to be July at the earliest, probably at some point. Of course, whenever you need help, reach out to us. And if you're not a current client, we'd be happy to start a relationship with you. Head over to our website to the Get Started page and schedule a free consultation. With that, Austin, has anything else come in?
Nothing else has come in, but I'd just like to also remind people to check out our YouTube channel where we host all of the previous PPP webinars that we've done covering the entire topic extensively. I think every SBA guidelines, we've had a webinar filling people in. So check it out. They're all available on a public playlist. This webinar will be no different. Once we're done, we'll have it up on our YouTube channel, and we'll be emailing you guys out a copy and a link to the video itself, along with the resources that we showed, right? The applications and the slide deck.
Yep, we'll send the links to that. Well, you guys, we know you're busy business owners, and we thank you for coming here. We'd be remiss if we didn't wish you all a happy Father's Day. Hopefully you got our card that was just sent out this morning. We like to be a little bit playful. It's work hard, play hard, and we hope you guys have a great weekend doing that. If there's no further questions as of yet, I say we go ahead and call this a recording. We thank you guys so much for being great and valued clients with us. Hopefully you found this helpful and informative. It's great news. It just gives so much more flexibility to let you guys really optimize forgiveness here. And we're just grateful to be connected with you and helping you and your business stay afloat during these challenging times. Anyone else? Any closing remarks?
Nope. Thanks, everybody.
Nope. Great weekend. Have a great weekend.
All right. Take care, guys.